Good evening, everybody. Thank you so much for joining another Applied Management Accounting revision session, AMAC, we like to call it. So we've been working our way through a few different tasks, responding to a few suggestions as to what you might like to cover next, so in no particular order. And that's brought us to here, to today, to an example of a task number 7. And task number 7 is going to be a task which deals with sort of like analysis of performance. It's going to have written elements, but it's primarily going to be a written task, to be fair. So definitely something that I think is good to practice. You've got to make sure you put the effort into practicing the written tasks just as much as you do the non-written tasks. So very, very important not to neglect these ones. So that's what today is going to be about. Performance of organizations, and that's going to be a bit of a mixture of like financial and non-financial performance indicators, and you'll see as we go along the sort of thing that is going to be expected of you in this sort of task. So we're working from the revision pack, which hopefully you all have access to. I did pop that into the chat box in case anybody needed it. Right, let's move across to our revision questions then. For anybody joining for the very first time, let me just mention to you that before we launch into each task and the requirements for that task, our notes start with a task briefing. Now this one tells us this task is going to be worth 20 marks, 25 minutes to complete it. So it's actually quite a significant task in your assessment. The task briefing then goes through and says, these are the sorts of things that might come up in that task. These are the sorts of things that you ought to have learnt. I'm not going to go through those now, but they are all there for your information. Oh, you're here for the first time, Zara. Well, welcome. Great to have you. So have you got the questions that we're going to be working through, Zara? Did you find those? The revision pack? In the revision pack in task 7, you'll see this task briefing where we've got the various different ratios that you might be assessed on. Okay, no problem. Let me just pop them back in the chat box. There we go. They're going to pop up in the chat box again there. There we go then, Leah. You'll also find the questions in the chat box. There you go. So you can just download those questions. So we've got our different profitability ratios, we've got efficiency ratios, we've got some examples of how we might interpret those ratios. So thinking about what they tell us, that's what we're going to be doing this evening. And also got some non-financial performance indicators, just some examples of those, just to, I suppose, just to give you an idea of the sorts of things that tasks might cover. I'm not going to run through all of that now, just wanted to show you it's all there. So if you do need to do a little bit of revision over some of these topics, then by all means do so. So that is the task briefing. We are going to go straight to here, to the actual task, see what's involved and focus our time on construction and answer to this task. But the task briefing can be useful. It's like a set of revision notes. So if you're an FI student, you'll find that this is our mock number 1. So you'll have this in your actual course materials. If you're not a student of ours, then you'll perhaps find it useful to print off that little question pack. So you've got the task briefings as well as the questions themselves. Right, so here we are, an example of a task 7. It says you've been asked by your manager for some help with some analysis work for a couple of clients. The first client, Compaxas company, they produce 2 products called the Axe and the Compass. You've got the following information for last year, and then we've got 2 columns, Axe and Compass. So probably worth initially just familiarising yourself with the data that you've been given. Now, if you look at it and think, well, goodness, they've told me loads of stuff, I'm not going to read through all of that, you might then go to the requirements first, so you've got an idea about what's involved. I don't think they've overloaded us with information here, so we're just going to have a look at it. So the 2 products, the Axe and the Compass, for each, I've got the product volume, So notice that is in units. I've got the selling price on a per unit basis. So I know how many I sold. I know how much each one sold for. Of course, those two things together would then give me the sales revenue, which I've also got. After revenue, I've got costs, material, labour, some fixed production costs to give a total cost of sales. So those three things together will equal my total cost of sales. If I then compare my sales with my cost of sales, that's going to give me the gross profit figure. So just reminding ourselves as we go along how we actually get to these. So total cost of sales is a subtotal of the cost so far. Gross profit is going to be revenue minus the cost of sales. From gross profit, I'm then going to move down and deduct any other costs of running the business. So things like selling and distribution and admin costs. And that's going to bring me down to my final profit figure of 828,000 if I'm looking at product X. Compass works the same, just different numbers. And then I've also got the net assets. So that shows how much as a business we have invested in each of these product lines, what's been invested in resources to be able to produce this product. So it could be the machinery for this product, could be the working capital associated with it, it could be the inventory that we're holding of this product and so on. But all the net assets associated with each of the axe and the compass also given there. Part A, probably the nicest part of this, the bit with some numbers in. Part A, calculate the gross profit margin, the cost per unit of material and labour, and then the return on net assets for each product. Okay, so shall we start with that? Shall we start with our gross profit margin? Anybody remember how to do that? Hopefully we can by this point. How do we calculate a gross profit margin? Remember? If you're not familiar with these ratios yet, please make sure you are by the time you actually get into the exam. Oh yeah, got some answers coming through now. Perfect. You're quite right. You're going to take the gross profit figure. So gross profit divided by sales or revenue, whatever we're calling it, and then to turn it into a percentage, we multiply it by 100. So for Axe, my gross profit is 2,028,000. Perhaps if I just put the working down for one of them, it'll be enough when you come to revise this to know how you do the other one. So 2,028,000 of gross profit divided by the revenue, which was 3.6 million. And then it's multiplied by 100 to turn it into a percentage. A gross profit margin of 56. Just looking to see if we've got any information about roundings. Usually an exam question would tell you something about roundings. I'm just going to go to one decimal place there. It didn't tell me. So 56.3% I think will do. Do you want to do the next one? Do you want to work out the gross profit margin for Compass? Tell me what you get. Good. I agree. 60.3%. So what that is telling me is when I sell product Compass, out of every pound of sales I make selling Compass, I get to keep 60.3 pence. And out of every pound I sell when I'm selling the product Axe, I only get to keep 56.3 pence. So I'm keeping a lot not a lot, but less of the money with ACS than I am with Compass. Now, it says here, calculate the gross profit margin, which we've done, the cost per unit of material and labour, and then the return on net assets. But there's nowhere to actually put our labour. I think that's a mistake. I'm just going to say let's calculate the cost per unit of material. Let's cross that part out. That's all we've got room for in our box. So we're just going to do the cost per unit of material. So how might I do that? How might I find the cost of the material needed for 1 unit? I'm thinking what I'm going to need to do is find the cost of the material for all the units, which is here, 1,080,000. Absolutely. Thank you. Who's that, Kate? Yep. So finding the material cost for all the units, 1,080,000, and then saying how many units did I do? And the answer is 9,000. So 1 million, whoops, I'm going back there, 1,080,000 being the cost of all of them, divided by the number of units that were actually produced. So 9,000 units. So the formula was total material cost divided by production volume. So sharing the cost over the units that were actually produced. So let's see what that gives us. 1,080,000 shared over 9,000. Okay. It's better. 120. Do you want to do the same thing with Compass? Working out total material cost and dividing? Yeah, thanks for that, Sylvia. What do you get for Compass? Just the same. Interesting. Both products cost exactly the same in terms of material. So I've written the formula on there. I've written down the workings for ACS as well. So hopefully that's enough for you to be able to revise from. So £120 for each. The return on the net assets. Well, this is something a bit different now. Return on net assets is about how much profit is generated from the assets that are invested. So I'm going to want to take the profit figure as a proportion of the net assets. And because it says express as a percentage, multiply by 100. So my profit was 828,000. If I'm looking at ACS, that's the return that I'm getting, the profit that I'm making out of an investment of 4,028,000. Times it by 100 to turn it into a percentage. So if I'm going to one decimal place, 20.6% for that one. And then I do exactly the same with my other product. It's profit divided by the net assets invested in that product. Oh, that one's not quite as good. 16%. So ACS is doing better. Return on net assets and return on capital employed are slightly different calculations, Sylvia. So both dealing with the return, but you with return on capital employed, looking at your total assets less current liabilities, and net assets can be calculated in different ways. All we need to do, it's exactly the same principle. You are quite right. And in this case, we were given a net assets figure, so we were just able to use that. Okay. So for the next parts, decided to do this a little bit differently. So there isn't very much room for me to write my answers in here. But let's have a look at part B. Explain the performance in terms of the gross profit margin and the return on net assets for 4 marks. So a couple of things I want to mention here. 4 marks, and you're talking about two things: the performance in terms of gross profit margin, and then the performance of the return on net asset figures. And you've got to explain. So I've got to be very aware of what the verb explain means. Okay, we are doing task number 7. If you've got the revision pack of questions, it's task number 7. And if you're a first intuition student, then it is mock 1, task number 7. I don't know the page number because I'm using the revision questions. If you can't find it, I'll pop it in the chat box for you. Just let me know. So I'm thinking here for 4 marks, excuse me, I think it would be a reasonable, oh dear, I'm losing my voice. It would be a reasonable assumption to say maybe 2 marks for each. So I need 2 marks chatting about the performance of the gross profit margin and a couple of marks chatting about return on net assets as well. So what I'm going to do for this part of our task is I'm going to actually make that a little bit smaller. To zoom that down a little bit so it fits in there. Hopefully you can still see it well enough. Just want to be able to see some of those margins. And then I am going to put an answer together over here, which I'll send out to you, of course, together with the revision recording. And it will just be a little bit clearer, perhaps, than my handwriting. I have to excuse me while I get rid of this little cough. Right, so how are we going to approach this then? It says explain the performance. So explain the performance of the organisation, but in terms of its gross profit and its return on net assets. So looking at these two products side by side, what am I going to say in terms of the gross profit margin? What could I say firstly that you might say, well, that's sort of stating the obvious. Let's start by stating the obvious. What are you going to go with first? Good, absolutely. Both companies are performing well, or both products rather are performing well. Yep. I'm going to send you this out, as I said, but I'm just going to sort of start to put a little answer together for you. There we are. So first thing I'm going to say, Compass is higher at 60.3 compared to ACTS at 56.3. And I'm going to go on to add to that, as you suggested, both products doing well. They've both got a decent margin. Of course, we've got to be a little bit careful about that because we don't know if they had a margin of 80% last year and they've got a margin of only 56% this year, then perhaps they're not doing all that well. But the main thing is that Compass is actually doing better than ACTS. But they both do have gross profit margins of over 50%, so it seems to be okay. But now, what causes different gross profit percentages? So I want to start by maybe stating the obvious, use some figures from the question. What causes a difference in gross profit? Yeah, can be the sales, can't it? Think about what the gross profit percentage was. It was based on the gross profit as a portion of sales. So it can either be the sales price or it can be the cost price that causes a differing gross margin, or maybe both. So it could be that our better product here, which is Compass, has a better selling price and better costs. We don't know yet, but I would maybe next go on to say, let's pick up my comments from over here. That the difference in the gross profit can be linked to a different selling price and a different cost price. It might be a little bit of both. So that's the next thing I'm going to say. And I'm actually focusing to some degree on stating the obvious here initially, and then I'm going to go on and elaborate. Okay, so we've established that the difference is linked to maybe different selling prices, maybe different cost prices. So what am I going to do next? Well, should we start with the selling price? Do they sell for the same amount? What can you find out about the selling prices? What can you tell me about selling prices? You can scroll up there. Move that over a little bit. You see that one? Axe selling at 400, Compass selling at 600. So let's include that in our answer then. Compass sells for more than Axe. Compass selling for £200 more, which would mean if the costs were the same, then of course Compass would have a much higher gross profit margin. But we've seen Compass does have a higher margin, but not that much higher. But Compass is selling for 600, Axe is selling for just 400. We're saying that the only difference in gross profit comes from different selling price or different cost. So if it's not, the selling price is obviously having a factor in that here, contributing £200 more per unit. Excellent, good. So that's one reason. And notice what we're doing here. We're explaining. We're digging deep, we're analysing, we're looking at, well, why did that happen? Why did that happen? That's the whole nature of explaining something. So we've got to make sure that we sort of dig enough information out of the question to come up with a decent answer. Okay, so we've got that then to start with. So now we need to see whether the costs are the same. So what I have done for us, and you could perhaps, I think maybe we've gone to a bit more effort here than was necessary, but I just wanted to show you, I suppose, because we struggle so much with what can we say in these written questions, I just wanted to show you quite how much there was to say. There's actually lots of things that you could have said here. So this answer is going to be longer than is expected for 2 marks, but I think it will be helpful in helping you to see how you can answer these in future. So in terms of the cost per unit then, we know that Compass is selling for more. Let's look at the costs. We already know material is the same. Labour is actually a lot less with Compass. So Axe's labour is more, and the fixed production cost is also less with Compass as well. So I then go on to summarise that. Oh, have I got those the wrong way around? I think I have, haven't I? Oh, silly me. Got my column headings the wrong way around. Let me just fix that for us. Not going to make much sense, is it? It's better. So we can see that Compass is selling for far more. It has a much higher selling price, but then when I look at its costs, it also has more costs. That sort of makes sense to me too, doesn't it? That seems logical. If we're achieving a higher selling price, chances are we've got more costs to go with that as well. So I now just need to explain that with some words. So I'm going to say that the material cost is the same, but then my other costs are actually different. So I've said material costs are the same, but both labour and overheads are much higher per unit for product. I've got those the wrong way around. For product Compass than for product Axe. So this then reduces the gross profit for Compass, because otherwise Compass would be doing so much better. It's selling for £200 a unit more, but I'm now seeing that it's actually got higher costs as well. So when I take those two things into account together, yes, it's got a higher selling price, but it's balanced out with the fact it's got higher costs, and these higher costs are going to reduce the gross profit for Compass. And then in terms of my overall comment, Compass actually is doing better, isn't it? It does have a 60.3% margin, whereas Axe was a little bit less than that at 56.3. So I now just want to summarise. So in summary, I'm going to suggest that the additional sales revenue that is generated by Compass, the additional £200, outweighs the additional costs, meaning that Compass overall does actually have a higher profit margin. So what I want you to see there, and that is way more than you could achieve for 2 marks, but I just wanted you to see my approach there. Number 1, state the obvious. Who's got the higher margin? Number 2, why are those margins different at all? What causes a gross profit margin? Selling price and costs. Then digging into each. Looking at the 2 products side by side. What's different about selling price? Note that down. What's different about costs? Note that down. Look at the bigger picture. Yes, sales are bigger. Oh, actually, but costs are bigger as well. So there is a difference in gross profits. It's not huge. Reason being, sales have gone up by a larger percentage between Axe and Compass than the costs have. So in this case, Compass ends up with a slightly better margin. Okay, so that would be my gross profit margin answer there. Any questions on that? Anything anybody would like to ask about? All good so far? So good? So should we have a similar approach then maybe for return on net assets? And again, my answer is going to be a little bit longer than I'd expect from you in an exam situation, but I really want to show you the variety of things that you can say and how we can really dig into this to learn what that verb explain really means. So for return on net assets, first thing then, might I then say Axe is 20.6 and Compass is 16? So Axe has a higher return on net assets. That could be the first thing I might include. Let's pop that in. Scroll up a little bit here, make some space. So let's start with Axe is better than Compass. But if I'm going to explain that, I've got to dig into how return on net assets is actually calculated. So I might start with a sentence to show what this ratio actually tells me. So I'm just going to include a sentence here to say the ratio shows how much profit is generated in relation to the amount of assets that we've got invested in the business. So it's affected by 2 things. Just like gross profit was affected by the sales and the cost, the return on net assets is affected by the profit as well as the amount of asset invested. So now I'm going to do a comparison of the 2. I've explained what the ratio is. I've explained the 2 components of it. It's to do with profit and it's to do with the amount invested. So let's just elaborate on what's happening here. The net profit of Axe is bigger. Just scroll up to here. Remember, you've actually got the net profit figures. So now I've decided which 2 figures affect return on net assets. I'm going to dig into both. So this profit figure is 828,000 for Axe compared with 610,000 for Compass. So I've done a little calculation. The net profit of Axe is actually 35.7% higher. I've shown the examiner how I worked that out. So I've done a little work in here to say, find the difference in profit first. And once you've got the difference in profit, you can then divide it by the profit of Compass. So I can see how much higher Axe is than Compass. Then do the same with the investment. Compare the 2. How much is invested in Compass? How much is invested in Axe? So I say the investment in net assets is 5% higher in Axe than it was in Compass. So work out how much it is in money terms, divide it by Compass's net assets. That's how much higher Axe is than Compass. My comparable is Compass. How much is Axe different? So on the one hand, as you can see here, the net profit is 35.7% higher, and yet the investment in net assets is only 5.77% higher. So I'm getting a big difference there. So what does that tell me? I want to put that into another sentence. that tells me that ACS has proportionally more net profit than it has more net assets. Its profit is 35.7% more, and yet it made a 35.7% more profit by having just 5.77% more assets. So give ACS a few more assets and it makes 7 times that in profit. So it's making a lot more profit relative to the extra assets that it has invested. So proportionally more profit compared with the asset investment there. So the next question might be then is like, why is that profit so different? 35.7% higher? That's actually quite a significant difference, isn't it? So what is it that has made the profit so different? And I've got some ideas about that too. So let me just jot those in. In terms of the profit, we're dealing now with the profit at the bottom, aren't we, this net profit figure? But look at the gross margin to start with. ACS actually has a lower gross profit margin to start with, and yet we're saying it's got more net profit. So what happened to give it more net profit overall when we actually saw it had a lower gross profit margin? Let's try to understand that. So ACS has a lower gross profit margin than Compass, absolutely. The operating costs are the same. We've got 800,000 for both. We've got 400,000 for both when it comes to admin. So interesting that ACS has a lower gross profit percentage. We then have equal operating costs, and yet it ends up with a bigger net profit in total. Why? Well, it's because of the units, isn't it? That net profit of 828,000 is dictated by the fact that ACS sells 9,000 units, whereas Compass only sells 5,000. So I think that makes a big impact on that final net profit figure. So the gross profit in monetary terms is bigger for ACS. The net profit is also bigger. So although the gross margin was a little bit less, because it's just selling so many more units, it ends up with so much more overall profit. And that's what we're thinking about when we do our return on net assets. It's the absolute profit divided by the investment. So I think I've explained return on net assets is made up of 2 things, the return and the profit. I've talked about the difference in profit between the 2 products, as well as the difference in net assets between the 2 products. And then I've gone on to explain why ACS has a bigger overall profit because of it selling more units. I think way more than you could have done for 2 marks, but yet again, the point of this is for revision, and it's to help you to understand the topic better. So you couldn't have produced all of that, but it can show you the range of things that you could have done. How does that seem? Anybody have any questions? Anything I can help with there? Well, you've just got to pick up with as much of that as you can, I suppose. This is a textbook answer, and you're not a textbook. So you can pick out whichever parts of that, I suppose, you can remember or that you can do on exam day in order to pick those 2 marks up. I've shown you, if you work on sort of like 1 mark per point that's been explained, then you need, out of my explained points there, you just need to pick 2 of them. Of course, the more you're right, the more chance you've got of getting some useful stuff in there. But I think sort of breaking it down into the actual, what does the formula tell me? I'd always state the obvious to start with, but I'm not going to get a mark for doing that, but it will at least calm me down and help me out to be able to move on to the next part. Right. This part then, next part here, page 43, I've got lots more information before I actually get to the requirements. I'm just going to jump to the requirements. I'm just going to make this a little bit bigger as we read through it, and then I'll reduce it down again when we actually start with our answer. So it says, can I assess the performance of the business in Q2 in relation to the changes and incentives that the company introduced at the beginning of the quarter? 10 marks. So it wants me to assess the performance of the business in quarter 2 in relation to certain areas. Sales revenue, net profit margin, website availability, website visits, conversion rate, and subscribers. So 5 subheadings there. 10 marks, 2 marks per subheading for a point that is explained. Remember, assess the performance of the business in relation to the changes made. So now we've got to have a look at what the changes were. Right, let's have a quick look through here together then. Hats Company, client 2, is an online retailer of fashion goods and uses a range of performance indicators to measure the performance of the business. Quite normal. Performance indicators, very common. The management have been increasingly concerned about the lack of sales growth over the last year, and in an attempt to resolve this, they've made some changes right at the start of quarter 2. That's important. So the changes were made at the start of quarter 2. So I would expect to see some impact of those changes throughout quarter 2. What have they done? In terms of advertising, placed an advert on the webpage of a well-known online fashion magazine costing £200,000. This had a direct link from the magazine's website to Hat's online store. Okay, so they spent £200,000 with a well-known magazine to get their website linked into this very well-known magazine site. So that could work, couldn't it? That might boost sales. Search engine, they engage the services of a website consultant to make sure that when certain words are input into the search engine, like Google or Yahoo, website gets listed first on the page of results. The consultant charged £20,000. So we're trying to get our name out there in Google and Yahoo by doing some tweaks to our search engine. These all look like the sorts of things that might boost sales, or at least they might direct people to our website. Of course, if the website's rubbish, we're still not going to sell anything, but at least these things will be directing people to our site. Website availability. During quarter 1, there were some problems with the website. It wasn't available to some customers. Some of the time, the IT department made some changes to correct the problem. Good. Okay, well, you can't sell from the website if the website isn't working. So let's hope that those changes worked. We shall see. And then they also offered some incentives to customers. Incentive 1, a free fast track delivery, guaranteeing delivery within 2 working days for all continuing customers who subscribe to the online newsletter. You often get things like this, don't you? Money off if you subscribe to a newsletter. I see it quite commonly because they want to collect your data. They want your permission to contact you again with special offers. They can only do that if you sign up. So they give you something in return for you signing up to the newsletter. So this time they're giving a free fast track 2-day delivery. Obviously that must be faster than their normal service. That's their number 1 incentive. Idea number 1. Idea number 2, £10 discount for everybody who spends £100 or more at any point in time. So spend £100, get £10 off, like a 10% discount, I suppose, if you're spending £10. Downside of that is if you spend £1,000, you're still only getting £10 off. But you do get the money off by hitting that £100 limit. That was another idea. The results for the last 2 quarters are shown. Quarter 2 is the most recent. Then it says the results for quarter 1 reflect the period before the changes and before the incentives detailed above took place, and are similar to results of other quarters. So quarter 1 is just normal. Quarter 1 is what happens before we throw £200,000 into our advertising budget, before we get our search engine consultant, before we fix our website, before we have these incentives. A normal sales quarter. Quarter 2 is after these 5 things have been taken account of. So each of these is reflected in our quarter 2 results. Okay, so what have we got? Sales revenue in total, net profit margin. And the only purpose of looking at these really now is to check that I understand what each line means, so then I can see where I'm like to use it later. So I've got total sales revenue, I've got net profit margin, I've got total number of orders from customers. Well, it has gone up, hasn't it? And we could, if we wanted to, as we go along, maybe quantify some of these changes. So that's an increase of 8964. 40636 as a percentage of Q1, like 22%, say 22.1% maybe. Visits to the website also increasing. And I do like to quantify these things as I go along, because it just helps me actively read the question, keeps my focus if I've got something to calculate. So we were looking for more people to get to the website. Remember, we spent £200,000 with a magazine, so they would give us more people to the website. Well, that seems to be working. There's a lot more visits to the website there. That's gone up by 39.5%. Conversion rates, visitor to purchaser. Oh, that's gone down. So I've actually got 5% less people that actually visit the website buying anything now. So there's a decrease there. It is a decrease of, oh, because we've got to be careful with these. It's a decrease of 5%, as in 40 to 35 is 5%, but it started at 40%. So 5 divided by 40 is actually a decrease of 12.5%. So 12.5% less people are buying anything when they get to the website. So I've attracted more people, but I've attracted people that just want to browse rather than buy. Visitors accessing the website through the magazine link. Well, I didn't have a magazine link before. Now I've got one. So nearly 20% of all visitors are from the magazine link. Now I know how many visitors there were. So if you're telling me 19.9% of them came from the magazine link, I can work out exactly how many visitors that is. And again, all I'm doing is just spending a bit of time reading through the question, but as I read it through, I'm calculating things that just help me to sort of focus on the performance, because my whole answer is based on the performance of the organisation between Q1 and 2. And I guess whether these things that they put into place actually worked. So having a few numbers to work with is a good thing. Website availability, it's offline 5% of the time. That's actually unchanged. So despite the fact our IT department spent some time on it, they corrected nothing. It's still offline 5% of the time. Next one, number of customers that spent more than £100 per visit. Remember that qualified them for the £10 voucher. So this will help us to see whether this was actually a popular scheme or not. So there's an increase of 1,740 customers out of the 4,650. So an increase of 37.4% there. And the number of subscribers to the online newsletter, that's what they had to do to qualify for their voucher in the first place. Increase there of 7,300. Oh, that's a huge increase, isn't it? 7,300. We started with 4,600. So that is actually 158.7%. So it's doubled and then half as much again. So all I have done there is just take a couple of minutes to calculate some figures. It just gives me a better idea And a bit of a head start, I suppose, when I get into the next sections, because I've already read the section headings. I've got to discuss things like sales revenue, profit margin. I've got to discuss website availability, visits to the website. I've got to discuss the conversion rate. So how many people that are visiting are buying. I've got to discuss the number of subscribers. And whoever wrote this question didn't write all of that just because they were bored. So it must have some relevance in my answer. So I think just doing a few calculations initially might be helpful. And as I said, it just helps me to read the question. You might say a little bit more actively. Just gives me something to do, because otherwise maybe I read it, but I don't really take it in. But by doing a few calculations, it's helpful. Right. So now I've got that together. Just going to make that a little bit smaller again. We can go with, I'm going to go with maybe 75%. Just a little bit small, but it's still there. So we can keep it alongside our other answer here. And we can now start to put together an answer for the next part of the question as we run through our part C and then our various discussion. Just remind ourselves about the requirement. Assess the performance of the business in Q2 in relation to the changes in incentives. Okay, so performance of the business is what it's talking about, but in relation to these particular subheadings. So I don't think I want that on the screen. I think I'm going to put this on the screen so I can discuss the performance of the business. So what I would like to do within this section is give you a little bit of a structure for answers. I'd start with a subheading in my actual answer. So I'd say sales revenue. And then I say, I don't write this on my page, but I say for you, I say what, as in what's happened to sales revenue. That's the first thing I want to know. So in numbers, what has actually happened to sales revenue? It's one of the things that we didn't quantify, isn't it? So maybe we could go back and do that. So the first thing that I would do then is perhaps jot down that sales revenue was 2.2 million. It's now 2.75 million. So it's gone up. How much has it gone up by in money? How much has it gone up by in percentage terms? I want to get that into my answer. In the what section, I often find I'm literally stating the obvious. I want to say what has happened to sales revenue. So it's just like a summarized answer here, but this is what you'd need to say. Sales revenue has increased by 25%, going from 2.2 to 2.75 million. That's a significant increase. So I'd need to get that into some sort of sentence form, but that's what I would need to say. Then I want to say why. Out of our incentives, what might have helped us to increase sales revenue? What do you think? Why might sales revenue have actually gone up? What have we done to try to boost selling? Yep, giving a discount. Excellent. So that's what we say then. Anything else that we did? Yep, offered some faster delivery, did some advertising, all of that. So I started also with a discount of £10 per £100 spent. So what I'm saying here is that I think that offering the discount has possibly increased sales, but it could be that the discount has been debited to sales. And I've just recorded like my net £90 of revenue, or the sales discount could have been actually debited to an expense in a discounts allowed section. So I don't know where the debit's gone, but sales could have increased by the whole 100, or they could have at least increased by 90 for every customer that has taken up that discount. So other things, maybe the advertising has increased our brand awareness. Increased awareness of our website and products and boosted sales. The consultant also worked on the search engine to make the website more noticeable. which should increase traffic to the website and hopefully sales. Now, it's all a bit general, isn't it? I'm not sure I can really do much more. You also mentioned the faster delivery. We did have a delivery option as well. Maybe that attracted people. I mean, the idea of the faster delivery was to get them to actually sign up to our newsletter. So I don't know how important faster delivery is to customers, but you could certainly include that too. I don't have a problem with that. But what I just want to finish off my little sales section with, having gone through my what's and then moved on to my why, I just want to say, actually, I can't tell. Without further information, I don't actually know whether all of those incentives worked or whether none of them worked. It's not actually possible to tell. Yes, sales have gone up. Do I know why? Well, I've got some ideas, but I don't know for sure, which is the whole point of then going through the rest of the question and looking at each of the other indicators in turn to try to find out which of them have been successful. So I finish off my little section by saying these are some of the reasons that sales might have increased, but it's not actually possible to identify which incentive has worked without looking at the other indicators. The next one it asked me about was net profit margin. So I want to analyse that one a little bit too. They tell me the net profit margin. It's there in the question. So I think I can start with that. So again, I wouldn't write the word what in my answer. Certainly probably be avoiding writing the word what, and certainly wouldn't be highlighting it in yellow. But this is just to give you some structure to the answer. So what has actually happened? Net profit has fallen from 25% to 16.7%. Anything else I could do to help me understand that net profit margin? I know it in percentage terms. Can I find what it is in actual numbers? How would I do that? How can I find the net profit in actual money? Would you not take that net profit percentage multiplied by the selling price or the sales revenue? So for example, quarter one, you know that the revenue is 2.2 million. So if the net profit margin is 25% in quarter one, it tells me how much the net profit should actually be. In quarter two, 25% would have been 459,250. So what? Oh, that's not right, is it? Let me just check my work in there. I think I've mistyped that. Yes. It wasn't 25%, it was 16.7%. So in quarter one, my net profit would have been £550,000. And in quarter two, the quarter two sales were 2.75 million, and at 16.7% net profit in quarter two, the sales would have the net profit would have fallen to 459,250. And Madalena, you're suggesting that the expenses have gone up. Yes, quite possibly. What I want to do here is to try to identify, as Madalena's saying, expenses have gone up. I want to know, well, why and how much? So what I'm trying to do here, a really sort of detailed analysis to say, this is what the net profit actually would have been in quarter one. This is what the net profit would be in quarter two. And we should know that the net profit percentage times by the sales gives me the net profit. Hopefully we can do that. So I just want to see, if I hadn't done anything, if the 25% profit margin could have been maintained between quarters 1 and 2, how much would I have made then? So if I'd still kept my profit margin at 25% and my sales had been 2,750,000, how much profit would I then have? Well, there's the answer. I'd have 687,500. So if I could have kept that profit margin going from one quarter to the next, I would have made more money. How much more? Well, let's compare them. 687,500 is what I could have made if I'd maintained a 25% margin, but I actually only got a 16.7% margin. So I did lose out on 228,250 in gross profit. Net profit. So that is what is actually happening here. There's a fall in net profit margin in money from this much to this much. And then say, if you'd have kept that margin going at 25%, this is how much extra profit you could have made. Now we're going to get to Madalena's point. We're going to try to explain why, where that £228,250 has gone. What happened to make that net profit margin lower? What are some of the things? Madalena said extra expenses. What are some of those extra expenses? What's actually happened? What extra costs have I incurred that I'm aware of? Yeah, costs, but which ones? Can we be more specific? Anything the question told us about these incentives and what they might cost us? Yes, well done, Kate. £200,000 for the advert. 200,000. That's surely going a long way to explaining this net profit difference. The consultant as well. 20,000 there. So we don't just say what, we say why. 200,000 spent on marketing. 20,000 spent on the search engine consultant. The discounts. Maybe the discounts have been included as an expense. They could be in operating expenses as well. £10 in every £100 spent. So maybe my discounts figure is in there. We offered a fast track delivery service. So that's got to cost extra, surely. If I'm paying more to have things delivered more quickly, maybe that's costing money as well. So I'm isolating the fact that the net profit has not gone up by as much as I would have hoped, and I'm giving explanations as to why. So whenever I'm putting my answer together, there's a what has actually happened. It asks me to assess the performance of the business in relation to these changes and incentives. So I say, well, okay, what changed first? What's different? And then why? You've got to have the why. The why is the added value. That's actually where you're going to get the majority of the marks, where you are explaining what has actually gone on. So we've got a what and a why. So we've done sales and we've done net profit margin. We're then onto the website. Now the website I actually split into two, just so I could explain it to you a little bit better. So I split it into visits to the website, and then I split it into the website activity. So let's get this one together. So in terms of visits to the website, we did actually do a few little calculations on the side already, didn't we? So there was an increase in visits to the website of 40,125. We talked about that over here. What was that as a percentage? Well, I've got to show the examiner my workings, but it was 39.5%. We talked about that, and there it is now in my answer. So that's the what. What about the why? Why did we get more visits to our website? What could we say? So what could be some of the reasons for that? Mind yourself with the incentives. Mind yourself about the spending. Placed an advert on the webpage of a well-known fashion magazine. We spent £200,000 with a direct link to Hat's online store. Yeah, absolutely. So what I want to do here is try really hard to add some value. Oh, I've lost my why. Let me just paste that in again. Just want to bring in my why. There we are. So starting with a fashion magazine then. If we're talking about visits to the website, let's check what we know about over here. The visits to the website then were up by 39.5%. We also know that the fashion magazine created 19.9% of people visiting the website. So we quantified that. We said that was like 28,201. I've got all my figures over here, haven't I? We've already calculated these. So I would say the fashion magazine generated 19.9% of that web traffic, so 28,201 in total, showing the examiner my working as well. The search engine consultant made the site to be at the top when we do our Google search or our Yahoo search, so it should be easier to find us. So that should create something there as well. That increase, of course, isn't linked to the fashion. So I would say the increase not linked to the fashion magazine, if I've got 28,201 being the visits that I'm attributed into the fashion magazine advert, then the rest of them come from somewhere else. So if I've got 40,125 extra visitors altogether, which is what we said in the what section, and only 28,201 of them come from the fashion magazine, the rest must come from somewhere else. So maybe that's because of the search engine and the work that we did to get ourselves to the top of the page. So maybe that was money well spent. That cost just £20,000. Both changes seem to have worked, but the consultant costing just 20,000 has potentially generated nearly 12,000 extra visits, and the magazine costing 200,000 has generated 28,000 extra visits. So you might say the search engine consultant was actually better value. In proportionate terms, he has actually, per pound spent, generated more traffic than the fashion magazine advert did. So that was the visits to the website. Now that section, if I remember, was visits to the website and website availability. I've got to talk about availability as well. I think they were grouped together because there's not quite so much to say about website availability because it didn't change, did it? So I'm just going to grab my section for website availability. Oh, maybe we need another page now. Put it over here. So in terms of website availability, that's actually constant, 95%, despite the work of the IT department. So what does that tell us? The IT department didn't fix the problem. That's not great, is it? That's what we need to conclude here. The IT department has not fixed the problem. Now, it's a little bit difficult for us to actually assess the impact on sales of the website not being fixed. So perhaps there's extra work I could do. But if the website is not working, sales cannot be made. So it might be that we can get onto the website and then we get kicked out. So we're still getting the hits on the website. The consultant did his job. The magazine did the job. We're getting people to the website. They're just not able to actually convert their browsing into a purchase. Very difficult to assess the impact on the sales, but likely that visitors might actually just go to a different store. If it crashes before the purchase, I know that I do this, I get impatient. It's like, if it doesn't work twice, I'm like, okay, I'm not buying from you. I'm going somewhere else and I'll just use another website to buy what I wanted. So I expect that this will actually have an adverse effect on the sales. We can't quantify how much. We'd need some additional data. Maybe the website can tell us how many times people had stuff in the basket and then the purchase wasn't successful because the site crashed, or based on browsing history. Maybe it's possible to know that person should have bought something, but then they didn't. Like, what went wrong? Maybe the website crashed. So we can see at what point it crashed in relation to people's browsing. So I haven't got quite so much to say about the website availability because it is actually just a constant figure. I think that's why they perhaps grouped those together. But I separated them because they felt like different things. I wanted to show you them both. The conversion rate, what's that talking about? Well, that's looking at the number of people then that get onto the website that then go on to actually buy something. They called it here visitor to purchaser. So the what, it was a decrease. Let's start there. A decrease from 40 to 35%. Is that worrying? Well, you might say yes, it is, but there's something else quite big that's going on here that I think we have to consider. We have now got lots more hits on this website than we ever had before. Look at the total number of visits to the website. It is up by 39.5%. It's up by 40,000 hits on the website. So the fashion magazine did its job to some degree. The fashion magazine, together with the search engine work, got more people onto our website. That's one thing. Getting them to buy is different. So I think perhaps creating all this extra traffic has created a lot more people viewing our website, interested in looking at our product. And these might be people that will buy later. We're not going to write them off straight away and say, well, that's it, then we've lost customers that didn't buy anything. They now know about our website. They can easily go back and buy later. So not all visitors turned into actual purchasers, but they might buy from us later. I think traffic to the website previously might have just been more intentional. Oh yeah, so for me personally, I'm not a browser, I'm a buyer. So if I need some curtains, let's say, is what I'm currently on with. So I need to buy some curtains. So I go to Marks and Spencer's and I buy them. Don't want to browse, just want to buy what I want to buy. But perhaps the fashion magazine has got a lot of browsers, people that just are interested in fashion. They want to look at fashion. So they've been directed to the website, but they're not actually at the point of buying yet. Maybe we've got more visits now from the casual browser than we have the purchaser. But it could also be linked in part to the inability to actually buy anything because the website's down 5% of the time. So there might be a knock-on effect there. And then the final point was subscribers. So let me just look at our subscribers. I just want to do my what and why again. Bear with me. There we go. So subscribers are the people that we've actually got to sign up to our newsletter. The number of subscribers to the online newsletter, I've quantified it already, an increase of 7,300, 158.7%. So that's what I say in my what. How much did it go up by? What was that as a percentage? Is it noticeable? Is it not really very much? Is it significant or not? We can get that in there. That's the what. And then we move into the why. What have we done to get so many more subscribers? Well, there was a big push on subscribers, wasn't there? There was an offer to get £10 off when you spend £100. All you had to do is subscribe to the newsletter. So I think that is why, in part, that we have more subscribers. Does it explain all of them? 159% extra people subscribing. Let's just have a think about whether that discount is actually contributing that much or not. So what else do I know? Well, I do know that there's an increase in customers that are spending more than £100. We've got a section here. The number of customers that spend £100 more per visit, that went up by 37.4%. So let me tell the examiner that. So we've got an increase of 1,740 people, 37.4%. That doesn't explain the 159% increase in all our subscribers. We're talking about 7,300 of them compared with just 1,740 people that have actually taken up the offer of getting the discount by subscribing. So it might just be that the fashion magazine has got people onto the website and they're interested in fashion, so they subscribe to our newsletter. So I think that might be a link to mention there. Not really clear whether subscribers are existing customers or new ones, but I think because of the extra traffic on the website from the fashion magazine and from the Google ad, it looks like people are interested in hearing more from us. They're just not ready to commit to buy yet. Okay, so there we go. 2 marks for each of those. And what I've tried to do is just try to show you how, I suppose, a method to this, the what and the why. And what is super important with a question like this is that you add value. And I hope that you can see that in my answers. as we've gone through each section and I've asked the question why, I've looked for evidence amongst these ratios. So having done that sort of grunt work up front, having done lots of the calculations initially, I'm then in a position that I can just grab those figures and use them to help me explain what's going on. But notice the amount of linking that we've had to do there. Thinking subscribers are linked to the discount. Okay, so how effective was the discount? Look for the figures on that. The subscribers are perhaps linked to the increase because of the marketing campaign. So let's link it to that part of our answer. So all the way through, I'm assessing the overall performance of the organization and I'm linking the different sections as I've gone. Okay, let me just go through your comments here then. Subscription incentive was for the fast track delivery, not for the discount. Oh, maybe. Let's scroll back a bit. Oh, you're quite right. The subscribers was a fast track delivery, wasn't it? I seem to have gone off on a tangent there then, don't I? Yeah. So then we'd actually then talk about the fast track delivery then being the incentive as to why people might have subscribed to the newsletter. But we don't have any more information about that really, do we? That's quite a difficult one. So I think all we could perhaps say with the fast track delivery is that if I go back here to my, where are we? My spend here, I did say the fast track delivery will have contributed to the increase in costs. I've managed to explain some of the increase in costs in between my profit margins, but the fast track delivery will have actually contributed there as well. So that would suggest that people have taken up that fast track delivery option, but no, you're quite right. Would the exam tell you which points to talk about? Yes, it may well do something like this. It may actually get you to put your answer into these sort of headings rather than just leaving you with absolutely no structure. So yes, it's possible that you would have these headings to talk within. That was your question, Leah. Quite right, Tina. That's why you have to practice. They're also aware of the mark allocation and the time allocation. There were 10 marks for this. And remember, my answer is a textbook answer. My answer is not what you're supposed to produce on the day. My answer is more about showing you the range of points that you could have made. And then if you can pull out any two of the points that I've made, then you should be getting enough to pass. I completely agree. You can never write as much as the textbook answer that I've come up with here, but you can perhaps write enough to pass the question, which is what we're aiming for. Yes, we've got our first FI students sitting this exam in October. I don't think we've actually got much feedback on this one at all yet. We really haven't had many people sit it at all so far. I have got some results through, but not enough to have any sort of meaningful results on this, certainly from the distance learning team. And yes, it's 70% for a pass, Leah. Absolutely right. Yeah, so in terms of how many people have actually passed it, we don't have enough evidence. We might have had, I don't know, say 2 or 3 people that we've got results for. So we don't have enough data at all to be able to give you sort of any meaningful results from this one yet. We're just going to have to wait a little bit longer. I think we've actually just had a course finish for this one. We've been teaching this in our online live courses for the past 8 weeks. So those people will be sitting it now, but then they're going to have their 5 or 6 weeks wait for results. So we're not going to know for a while what the pass rate is looking like so far. Okay, well, I hope that's been helpful. I'm going to stop the recording there.